And I lost my shirt betting on Coinbase options yet again.
Don't ask them, what do we know? What I forgot is better than whatever they remember.
Welcome back to Delta Code. I'm Delta, an economist with over 20 years of investment experience, and today I will be covering how I lost $8.7 thousand betting on Coinbase call options in the last 2 weeks. Sorry for the clickbait with the shirt off. I thought it was important to show my subscribers how I also lose money. It's not always wins. Investing is a game of positive expected value, and when I invest in a short term or long term, I expect to lose some of those bets, and I entered those bets knowing so. Sometimes I win, sometimes I lose. I would not be financially independent and be able to live off of my investments if I lost most of the time. You gotta take your losses as learning experiences, and whether for whatever reason you lose, you have to at least learn something. And let's take a look at how I lost almost $9,000 betting on Coinbase options in the past 2 weeks and what I've learned from this experience. And hopefully you won't have to make the same mistake and lose as much money learning. In case you weren't following along from the beginning, I made a forecast that was very accurate for Coinbase. In retrospect, we know it was accurate, but when I made this bet, I assumed that most of Wall Street was not betting this way, and that was also correct. So this was my forecast, that Coinbase was going to make $1.6 billion in revenue, and that their profit would be about $700 million. I was actually underestimating on a lot of these points. Even when I gave out my forecast and forecast videos, I said I'm being very conservative on stablecoins and blockchain revenue, and I am overestimating the custodial fees because we don't know how much the ETFs would bring in. What actually ended up happening was they delivered better than expected numbers of slightly, maybe, $18 million more than I predicted, but this was still about $600 million more than Wall Street analysts had estimated. So it was a 60% beat from what was expected. Expecting that surprise in earnings, that's why I bet on Coinbase call options, because I expected the price to go up. Well, what happened afterwards? The stock went down, which didn't make a lot of sense to me. So Coinbase announced earnings at the start of May 2nd, and the stock moved slightly sideways, and then it went down to 199 the last day, which is sub 200. For a company that has delivered such a huge beat on earnings and expectations, this is unbelievable to me. One of the things that I was surprised by was their crypto gains, which added $650 million to their net income. This is the appreciation of their crypto investments in Ethereum and Bitcoin that they mark to market because of accounting changes. Up till now, before this accounting rule changed, it was very difficult to show any gains. You could only show losses on your crypto investments. So if people looked at accounting of anybody that invested in crypto, historically, they could only show losses and never gains. Now, we can finally show gains on crypto investments as companies. Coinbase finally marked their investments to what they're worth in the market, up $650 million. Their net income was $1.2 billion for Q1 alone. This is an amazing number. They made about $200 million in stablecoin revenue in just one quarter. This is basically free money. They're making digital dollars that people are using and taking their US dollars and putting them into treasuries, earning 5% interest. USDT company that also does something similar that is 3 times bigger made $5 billion last quarter, and they have like a team of 6 people. It's one of the most profitable companies. It's an amazing business, and I expect USDC, the stablecoin made by Circle that Coinbase owns a portion of, to keep growing in value and adoption, largely because it is the preferred stablecoin of Coinbase. Also, Coinbase has started making revenue on their layer 2 of Ethereum. They made $56 million in Q1 alone, and this is the fastest growing layer 2 right now in Ethereum. We can expect this revenue to keep growing with the pace of adoption of L2s. Now, how did I lose almost $9,000? Well, I expected my forecast to be accurate, which it was, and then I expected Wall Street to adjust accordingly given that they were predicting something much lower. One of the ways this doesn't work out is if the guidance that the company gives after they report earnings, they say in Q1 we made $1.6 billion, but Q2 doesn't look good, we're not going to make as much money, and rest of the year looks challenging. They won't say like we're not going to make as much money, but they'll use words like challenging, market headwinds, whatever. They'll have usually excuses for why their business won't perform. Coinbase did not do that. They guided strong Q2 that will look probably a lot like Q1, possibly even better if crypto prices surge up and there's more transactions on their exchange. So why did the stock not go up to 300 or 350 as I thought it would? I don't know. Do I still believe that it will go there within this year? You're damn right I do. That is why this week, when Coinbase went slightly below 200, I sold some of my second biggest position, which is Facebook Meta, to buy more Coinbase shares. Options, like the ones here that I lost on, are a very short-term instrument that you can use to bet on price volatility. I expected the price to move above $280 or at least near it days after reporting earnings, and for the call options 220 and 250 to be well in the money because I expected Coinbase shares to go up in price past their recent high of 280, 290. A conservative estimate was 290. If the share prices went to 290, my various options would have been worth these two would have been worth 14,000, these three would have been worth 12,000, these four would have been worth 8, and these four would have been worth 4,000, together totaling $38,000 on 8 invested. That's about 30 grand of profit I would have had just in the money had the share price had gone to 290 before they expired. Had it gone to 290 anytime before today, then there would have been additional premium that I could have sold the options for that would have been probably worth another $4,000 or $5,000. Here you can see the risk reward in my mind was I'm betting $9,000 and I will come up ahead about $30,000. That was the risk reward profile that I was. And if you watched my previous video of the Q4 earnings where I made $8,000 on my Coinbase options, then that whole Coinbase options strategy is a wash. I am still up about 100 grand on my Coinbase options that are long dated March of 2025 that had an $80 strike when I bought them. Options are a form of derivatives, and derivatives are the largest asset class. I want to show you this pretty awesome chart. Take a look at this. DeFi is this one little square, which is $180 billion. This is all of DeFi. Cryptocurrencies all together are worth $2.4 trillion. All of cryptocurrencies, half of which is Bitcoin at 1.2, 1.3 trillion. Okay. Now gold is $11 trillion. You can see how many squares that is. So each little square is 100 billion. Stock market, 89, let's call it $90 trillion. All of the stock market. Global real estate, 280, $300 trillion. Now derivatives are 1 quadrillion. That's 1,000 trillion. This should just blow your mind. This is why derivatives are way more important than stocks or cryptocurrency or gold or real estate. That's why options, those are derivatives. They're way more important. A slight move in stock can result in a lot more movement in the derivatives. So what am I going to do? Well, I'm going to take that one on the chin. That's a $9,000 loss. I made $8,000 in the previous quarter on my Coinbase options. So those kind of wash out to zero. My Alibaba options look like they're profitable and will stay so going into 2026 as Alibaba reported great results. And looks like the Chinese stock market might be turning around. What will I do with my Coinbase shares? Well, let me tell you how I think about this. All right, check this. This is the liquidity index in billions of dollars. Starting in 2008, the entire world pretty much reset their debt into refinance their debt into 3 and 4 year treasuries or bonds, which means every 3 to 4 years they have to refinance it. So what happens is you have your growth of liquidity because they're refinancing their debt, and then you have the debt kind of stagnate and then refinance and stagnate. This just happens to coincide with Bitcoin because Bitcoin was invented as a response to the global financial crisis, because all the bank bailouts and the over leveraged system, Bitcoin was the answer. So every 4 years, 2012, 2016, 2020, 2024, this is the yellow, this is the summer, also the years where Bitcoin halves. When Bitcoin halves, you have this uptrend for a few years of global liquidity. We'll expect some global liquidity to start really hitting here. And also, there's a supply shock in Bitcoin. Here is Bitcoin prices. 2012, after the halving, 2016, after the halving, 2020, after the halving, and now it's 2024. I'm not saying it's going to do this, but it's hard not to see it. And lastly, this is the Bitcoin price chart. So this is a rainbow of the ranges, and these vertical lines are every time Bitcoin halving event happens, where the supply that the miners can create each block every 10 minutes gets cut in half. Just a few weeks ago, we had a halving that cut the supply produced by miners from 6.25 to 3.18 or whatever it is, basically in half, which means that Bitcoin miners, in order to stay profitable, are now producing half as much Bitcoin as they did a few months ago. They still have the same fixed costs of equipment and real estate and electricity, but now are producing half as much Bitcoin. They have to raise the prices for which they sell the Bitcoin, which will make itself felt in the market, because vast majority of Bitcoin has already been mined. The additional supply that's being produced by miners is a marginal supply influx that happens every day. Now, miners usually just sell it on an ongoing basis at a profit to cover their expenses and have a profit margin. They're not going to sell it under $80,000 because then it's unprofitable for them. Let's take a look at the Bitcoin rainbow chart. Here's the 2012 halving, and then it goes up into the red territory. That's usually bubble territory, and then the bubble bursts and it goes down into this blue and purple area. And then the next halving, it's usually in the blue area, and there's a supply shock, and the price goes from 500 to, I think it was like, what was this, 17,000, I think was the top, 18,000. Yeah. And then we had the correction, and then we had COVID, and then we had a halving. During COVID, the price dropped actually down to like $3,000, I think. Halving happened in 2020, and shortly after in 2021, we hit a new peak of $69,000. We had a double top, and then we hit another bear market. Dropped down as far as $15,000, $16,000 in 2022. And then we had a steady, slow rise into 2023, into 2024. The later half of 2023, it went from 16 to 30. expecting the ETF, and the ETF happened, and we had all new all-time high of $74,000. Now we're here. Bitcoin halving just happened, and the expectation is we'll hit somewhere this yellow or red zone within the next 12 to 18 months. If that happens, price of Bitcoin should be at least six figures, if not, 300,000, maybe more, maybe 500,000. If this happens, as it historically has following a Bitcoin halving, Coinbase will make record profits like never before, because Coinbase makes a lot of revenue on trading fees. As prices go up, more people get interested. I know it is ludicrous that people want to buy Bitcoin at 70,000 or 170,000 more than they did a few months ago at 16,000, but this is how human nature works. When it's up high and everybody's saying it's going to go to $1 million or $3 million, then people are willing to pay $70,000 for something they could have bought for $1,000 or $16,000, depending on your time frame. In any scenario, even if Bitcoin continues to go at the current range of, let's call it $60,000 to $70,000 rest of the year, and it doesn't go up into six-figure range, as predicted by the Bitcoin rainbow chart, Coinbase will still make record profits because they make revenue from transaction fees. The transaction fees are a percentage of the total volume. Therefore, their revenue will go up. As I've shown before, their transaction revenue almost organically grows with the price because it's a percentage of fees. And more people choose to trade on Coinbase when prices are more volatile, whether they go up or down. But usually if they go up, more people get interested, more people hear about their friends making money in crypto and want to get in. So about $1 billion from consumers alone, total $1 billion together with their layer 2. This should be higher next quarter and the next quarter and the next quarter, especially if prices keep going up. Stablecoins are a function of how many USDC coins have been minted and the interest rate. USDC coin is getting wider adoption, which means more are being created, and which means there's more cash for Coinbase and Circle to buy treasuries and make free 5% interest on billions of dollars. Rest of this, subscriptions, Coinbase One, they're adding more value for you to subscribe and pay $30 a month. They have over 100 million users. If only 10% of their over 100 million users subscribe to Coinbase One, that can bring in as much as $150 million of free revenue. That can bring in as much as $150 million of revenue for Coinbase. They're also growing their derivatives platform. And if you remember the graphic I showed you, derivatives are the biggest asset in the world. That is probably going to be one of the most important business items for Coinbase in the future if they are successful. So I guess I will not be getting this Model Y with my Coinbase options this week. But next week, we'll buy it with something else. Sorry I could not get my Model Y with my Coinbase options profits, even though my forecast for Coinbase was as accurate, if not the most accurate out there. Wall Street did not react the way I thought. As the wise man once said, the market can stay irrational longer than I can stay solvent. Wise words. We cannot always predict what the market will do. In the short term, it is a voting machine. In the long term, it is a weighing machine. And Coinbase's value just keeps going up. Eventually, the market will weigh it correctly. Thank you for tuning in. As always, may the force of compound interest be with you. Peace.
Peace.